We're entering the final stretch of the year, and quarter four is generally where the market's best growth stocks emerge. So tonight, we'll spotlight the ASX growth leaders positioned to deliver in quarter four and break down what's driving this quiet but powerful shift in the market. Get ready, because this could be the start of the next major growth cycle and have massive implications to your portfolio as we see out the year. Our analysts have guided investors through every kind of market, from the GFC to the AI revolution, and their insights are trusted by the likes of Bloomberg's, Sky News and CNBC. I'm Janine Cox, joined by Wealth Within Senior Analyst Phil Tortevsky and Wealth Within Graduate and Head of Sales at Blueberry Markets, Zoran Krezovic. Good evening, gentlemen. How are we? I hear that you've both been in the wars over the weekend.
Yes.
So it just is it in the stars at the moment, or
look,
they're not aligned?
It's what happens when you try to be 20 when you're 40.
I agree with that.
And look, you've got some great growth stocks for us tonight, which I'm really excited about.
Yes, we do. We're going to be covering off all the hot trends coming into Q4. And I mean, really, like you said, it's so important right now coming into that last quarter where that huge growth is likely to come. So yes, good stocks.
Great. And also, you're going to depose Phil from the hot seat or the podium with your hot stock tip. So I'm really excited about that one.
That's a good one.
Yeah, okay. Let's see.
Well, let's get straight into it then. What themes are likely to shine in quarter four? Now, Phil, tell us about it.
Yeah, so I mean, right now for me, you've got a few themes coming on. Obviously, tech is doing its thing. Materials is really the quiet achiever. Since earnings, it has really slowly started rising and showing strength in terms, relative to what those reports were. But to me, the big one is the small cap sector. The small cap sector right now is outpacing the large cap sector. So we're seeing buyers come through there. That is the one to watch. Yeah.
And that's often a sign, isn't it, of a market heading towards that boom and that peak, when the confidence comes back in and people are looking to put more money into the smaller end of the market.
Well, it's a bit of a FOMO as well, right? Because generally you'll see the top end of the market go up first, and then after that, there's a bit of rebalancing and looking for the next best opportunity, and that's when the small caps generally tend to start picking up, and it's generally a late within the cycle, but it's a great opportunity to actually capitalize from it as well.
Great, everyone's excited about that. Now, when you're positioning for growth in the final quarter, what's the one thing that investors should be focusing on? Is it earnings, momentum, or something else, Zoran?
What a good question. I think it's a bit of everything, to be honest. But right now, because we essentially around 12 months in a bullish cycle, and generally bullish cycles tend to go at 12 to 18 months, I think if we focus on earnings, purely on earnings, then we would likely to say the market is overstretched, and that's what a lot of fund managers are saying out there, especially on top 20 stocks or banks. If we're going on momentum, then I still feel there is actually quite a bit of bullish sentiment within the current market to continue heading higher. There's always a bit of a market risk involved in everything that's happening geopolitically, but I'd probably ride the momentum. I would also take into account the seasonality aspect as well, because we're heading into the year end. And as we know, based on the historical cycles, that November, December tend to be really good months as well. So hopefully we will see some of the upside to actually finish the year on a strong note.
Great, so keep an eye on momentum and remember to look for that on the charts. Now, let's get into our first lot of quarter four winners. Phil, you've got a few really interesting stocks tonight, so make sure you stay tuned, everyone, for these really juicy ones. And we've got some more after we talk about the stocks that you're interested in.
Yeah, look, I mean, after the break, the ones are going to be quite special. So let's get to the first four and we'll deal with those later on. But the first one is Eclipse Group. Now, FPR is the stock code. This one is quite interesting for a number of reasons. Clearly, we're in a bullish momentum, as Zoran rightfully mentioned earlier. Most stocks right now, I mean, bar healthcare and energy, most indexes or sectors are rising. I really love how it's uniformly going and rising, hitting this momentum line. This is the level for me to watch and give you that indication where things may be turning the corner. But right now, most recently it came back to test it. We've seen buys come through again. I really like this if it can break through this high of July 2025. That would give you the confirmation that the next leg up is on its way and potentially heading towards that 388 level, which there is a little bit of resistance from previous highs and also from those lows near the previous all-time high. The only other thing I want to mention on this one, and it's quite exciting, is volume. We've seen volume really come into the picture over the last couple of months. And, you know, when you look at this stock, just watch the weekly chart. Volume since January 2024, you watch it and you see not much relative to what we saw on the 19th of September. And that's come in right after a major low. Price has respected it and bounced on up. And if I zoom that out, we're literally coming into volume we haven't seen since the previous major low, which was 2020. So that's why I think this is quite exciting now. As long as it holds that momentum line, we should have a clear run.
So you think a big institution is positioning themselves for that stock?
Look, I mean, regardless of who it is, I just like to see that, you know, it's eye-opening when there's a big chunk of volume coming through and you're seeing it being respected. It's one thing for it to come through, but then what's the price action following that?
Exactly.
And that gives you the clue in terms of what comes next. And right now we're seeing bullishness. So I think...
Yeah, I mean, you're showing a stock that's got plenty of upside. And if we just go back to the chart for a moment, it's got plenty of upside. And also it's been just pushing up so strongly over time. So after having that pullback, this could be an opportune time, really, couldn't it?
Well, yeah, and we spoke about that off air. I mean, how many people, you know, look to pick tops and bottoms, but often the safest trade, the best trade is riding momentum when it's there. And clearly right now this is in trend, so...
Fantastic. All right, let's go to our next stock. This one's for you, Zoran. I know you're going to like this one. It's one of my favourites and interesting stocks. It's been hanging around at levels that it just can't seem to get past. It's been moved out of the energy, but it still seems strapped to that. What do you think about this one?
I think it's a great stock, Janine. I agree with you. I think, you know, looking back in 2016, obviously, that was the major trough. And then obviously the April 2020, when COVID hit, the stock has actually gone up nicely and then retrace somewhat. I think it's actually starting to gain some ground again with the hope that it can break higher and maybe perhaps test that around $17 to $18 level mark. If we go above that, then we should see a lot more upside. But obviously we're still in a bit of a downtrend at the moment. We would like to see a break around that high of 1581. And if we break that, then the next level should be around $18.5, $19. But the stock is actually looking, it does look like there is a bit of upside on it, and it looks like we could be actually heading higher up.
Now, some of these stocks, because they trend so well, the beautiful thing is that you can use some really simple rules to trade them. And one of those rules you're going to find in this book, and you'll learn all about how to put it into practice. This book, it's tried and tested. There are a lot of people have come and thanked Dale and shook his hand personally for writing it and putting it all together for you. So make sure you get a copy of this, How to Beat the Managed Funds by 20%. By Dale, and it's free if you just pay postage on our website. So there you go, there's one for you. Maybe a good book to get for a present for someone if you're looking for a Kris Kringle as well.
Well, we've actually seen that, a few comment sections saying, hey, I've bought this for my cousin or I've bought this for my friend, and they're loving it. So
exactly, helping them out. Now, our next stock is really interesting. This one is sort of in the tech space. It's in the software as well as hardware. This is Data, DDR.
Yes.
Would you like to talk about this one, Phil?
I would love to. All right, let's get to the chart. Now, this one here, again, you know, most tech stocks, they did experience a bit of a pullback around that April period, now starting to bounce up again. And I mean, just the talk around tech and AI, I don't know if you're following the news, it's everywhere. You know, we're going to get into our trending topic later on today, which is covering off one of the most major stories coming out of tech right now, which could spell huge opportunities, but we'll get into that soon. Going back to Data, you're seeing right now some really important price action, and I'll start things off with this particular level at $8.10. I mean, you know, you saw the market test it in July 23. Huge buying came through. Then we saw that sell-off in March, April, which was common with most tech players. Now, what's different about this time, what I really like, was we've had the chance to test it in April, test it a second time, and go up at a pace which is a bit more sustainable. This was quite sharp. So we've had huge buying, and again, dare I say, if you scan your eyes over the volume section, what do you see? Huge volume. The most amount of volume coming through, again, coming through at a significant low, or just as the buyers picked up in August. And if I zoom that in, sorry, I don't want to hurt your eyes, but if I zoom that in, that's on this massive buying through here, which has been respected for now. So I quite like what is happening with Dicker Data. I think as long as it holds, especially in the short to medium term, as long as we get over this now and find the base and hold above $9, I think we've cleared a lot of this congestion and what could be considered accumulation in price. And we've also got a really nice momentum line we can follow the price up. And I think watching those two markets would be the best port of call right now. But as long as it runs through trend, we can see a big move up, and I think a nice run to $13 in Q4 could be very likely with this stock, yes.
The only thing I'd probably check when the volume spiked up is whether there was a positive fundamental, like a news announcement as well,
potentially
to back up the price actually continuing to head higher.
Well, it was August, so we are talking earnings time. I'm assuming it will
Probably,
be.
yeah.
All right, now we've got the last one. It's AEL, Zoran. I'm going to throw this one to you to have a look at. Go for it.
Okay, so another good stock looking really, really solid on monthly chart. Looks like it's actually consolidated for quite a long period in time, and now it's basically spiked up and come back to retest that level. So I know within the course itself, we teach a lot about pattern analysis, price, pattern, and time. This is probably one which has actually got a price and pattern involved in it. Momentum line is also looking quite nice as well. So I'll just find the right.
It's interesting, isn't it? Because in the course, we tell students to focus on that monthly chart. Really important that you focus on the big picture. 80% of what you're going to know about the direction of a stock, you're going to find from that monthly chart. The weekly chart tells a lot. Now, you guys know that I'm not a big fan of stocks under $1, and this one sort of, you put that in there. Phil's got a smile on his face, if you just have a look at that. I'm not a big fan of these stocks under $1, but when I looked at the monthly chart, it sort of makes it so much easier to trade. You probably find that, and that's the purpose of the way that we teach. It makes it easier for you to do it. So Zoran, sorry to cut you off.
No, that's fine.
Please.
On weekly chart, it's creating a bit of concern in terms of the actual, short-term bar analysis and the way candles are or the way bar chart is, because to me it's indicating quite a low liquidity within the stock, which is a point that you raised, sub $1 stocks. But nevertheless, volume has actually picked up somewhat as the price did, and looks like it's actually there is a fair bit of volume at the moment as well as the price actually dropped off. So, whilst I probably wouldn't allocate enormous amount of capital into this stock. If you're looking for the smaller part of your portfolio, 5% or something lower, and you're happy with the heavy fluctuations potentially, it could still provide quite a bit of opportunity and upside. On weekly chart, we got a strong down bar here that happened on week ending 26th of September, but it's come back within the range. So as long as you can hold about 20 cents at the moment and you can reclaim some of those levels and start heading higher and maybe above that 27.5 cents, maybe there is a lot more upside on it.
Yeah, I'm looking at that monthly chart. I know that some of the traders are going to like that one. Thanks very much for that. So what's your favourite out of those four? Which one?
I need to go back and have a look. Let me have a quick look. I think I'm going to go with Dicker Data.
Dicker Data?
Play, yeah.
Zoran?
I'll be contrary to your views, so I'll go with the current one, with the specky one.
Fantastic. Okay. Well, that wraps up our first four picks, but don't go anywhere. Up next, we've got a bunch of stocks that look like they're ready to make their best moves up in Q4. But now it's time for our trending topic this week. Phil, and you've got a good one.
All right, I'm in your seat. Let's go. The trending topic this week is the big news coming out of the AI space with Sam Altman's OpenAI, best known as the creator of ChatGPT, signing a deal to attain AI chips from NVIDIA competitor AMD. Now, the share price of AMD has rocketed up, but what this story signals more than anything is that perhaps the market has underestimated the rate and size of growth in the AI field. Now, if we bring this back home, AI chips need storage in the form of data centers. So the more chips required, the more data centers, and we have some amazing ASX listed companies in this space. So whilst the light is shining back on AI, let's go and take a look at our best data center stocks to see if a new opportunity has just arrived. I mean, it's a big space, obviously, and big what happened with Sam Altman's company.
Well, AMD's due to make $100 billion out of this.
Yeah, and I mean they're giving OpenAI a piece of the shares, so you got to say, all right, what kind of deal's going on here?
Yeah, that's right.
But it shows, okay, a lot of these AI companies, they're spreading their risk. They're saying, okay, we're going to have so much growth here. If we concentrate all of our supply to one company and something happens, we're in trouble here. So it's creating a lot more opportunity.
Makes sense.
Yeah.
All right, let's have a look at the stock.
So in Australia, we've got DGT. Now, this is a REIT focused on infrastructure, including data center assets. Now, it's relatively new. I wanted to bring it in there. Obviously, we're going to get into the big boys soon. But what's quite interesting is, like most IPOs, they open. Sometimes they get that initial euphoria, or, I mean, for me, it would be even better. What's happened is they fall below the IPO price and then start to form the real base or find that real value. We've seen big volume come through near the low, big buyers come in through June 2025, and right now it's just trying to find its feet. So I think, being in the space that it's in, there's this beautiful momentum line here just causing things to hold up for now. But if you look at the way it's been falling, we've got a lower low than the previous low there. We've got a test which is higher. So that's giving me the first indication that, okay, maybe buyers are really now getting ready for that next or that third leg up. Very much so, given we've come back to where the real strong buying started. So I'd be watching breaks of 330 right now. If it can get through there, then I think it's got a real chance to get back to that $4.13, 15 level. But when you're talking big picture and trend, I mean, this has the opportunity to go much further. It's just getting the timing right. I mean, that's the most important thing that we show here, because regardless of trend, regardless of idea, if you don't get the timing right of when you get in, how you place your stop, and when you get out,
what's the point?
It's all for nothing.
Yeah. Okay, so you've got two. So you looked at
yes.
First one. The second one, I think, is more favoured by a lot of people, isn't it?
Yeah, look, it's loved. I mean, it's the biggest one. It's the largest listed data centre developer operator in Australia.
So would you be watching debt in these companies? I mean, people will get caught up in the euphoria of the AI and the data centres, but what about their debt?
I think for the AI space, a lot of it, more so than debt, well, debt is part of it when you're talking about, a lot of them are funded by debt, and they aren't producing a profit. That's the reality of things. You go back to 2000, the dot-com era, you had a lot of companies there that were in the similar boat, surviving on funding. And then a lot, when the crash happened, a lot got washed out and you were left with Amazon, the big players. So there'll be that opportunity where the huge players will come through. But data centers is more hardware. So we're not talking about, stuff that isn't earning to some degree. So yes, it is a concern in certain aspects, but for NextDC, I think this, given it is the biggest hardware developer of things, I think I'd be watching more purely the share price more so than the underlying development in there. Keep an eye on it, fine, but when you're looking at the share price, it's doing some great things right now, and it's come off a huge correction, but it just proves the point again, to these techniques we show week after week, time after time on this show. If all you did was that, you would have recognised that there's a real possibility $10.40 was where the new base would come. And we saw big buying come in. We saw the sellers try, but buyers said, no way, this is going to be a new acceptance. And look how strong the buying's been again on that next leg up. So it's back in bull trend. For me, it's quite stretched right now for more of a short to medium term play. I mean, near that all-time high, there is the propensity that we could get a bit of a sell-off. So I think there might be a better opportunity in terms of risk-reward, but we're back in trend. So it's about identifying that, what works best for you with your strategy, whether you're long, medium or short-term. But I think this is back in bull market mode. So yeah.
I mean, it trends beautifully in spots, doesn't it? I mean, it has those really nice runs that you identified before, and that's how that was looking at it on the monthly chart. We can see how nice it is to trade once it gets going. So that's what traders really ought to be looking at with these sorts of stocks, shouldn't they?
Well, absolutely. I mean, like you said before, it's about identifying the big picture. And the beautiful thing is, regardless if you go big stocks or small stocks, the big picture is the big picture. So that allows you to really formulate the strategy. It's all about context. You could have all these rules on your short-term charts and say, okay, this is a nice opportunity to buy, this is a good rule to get in, but where's your context? Is the stock after a 5-year expansion, is that worthwhile? Is it coming out of a low? It's all relative to context where it is, and you find that on the big picture chart. So like you said, that's why it's the most important.
Yep. Well, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Okay, Zoran, you're up. How would you like to have a look at the first one, BGL?
BGL, Bellevue Gold Limited. So looks.
That's right up your alley, isn't it?
Yeah,
Gold
it
stocks.
is.
We were just talking about that before
we
came on air.
Yeah. So gold is in a spotlight at the moment. It's probably best performing asset over the last couple of years. I think it's something like 60% year to date, and then another 45% last year as well. So it's about to hit 4,000 US dollars per ounce, which is incredible. But this stock in particular, it's done really well, but it's had an inverse relationship with gold movement in general, and we can see that on the chart back from May 2024. It's been actually in a long-term downtrend. What I think is really important here is that this momentum line, as we like to call it here, has actually been broken now to an extent, and we're actually seeing a good base of from around 80 cents. It's gone above $1, so Janine, this could be something that you would consider. But nevertheless, on weekly chart, it's also closed the gap. And what I do really like here is the volume is actually starting to pick up quite heavily as well. So the price is appreciating, the volume is supporting it, and there could be a lot more upside. There is a small gap on weekly chart here, so I wouldn't actually undermine the fact that the price can actually come back and retest these levels somewhere around $1 mark. And if it does, then it could be a great opportunity to actually get in, because the next level of resistance would be around $1.35 to $1.40.
But isn't this like a lot of these small cap gold miners now and silver miners, they're starting to fly, which they haven't been, relative to the gold price. It's been Newmont, it's been the big players moving.
It's the gold rush now.
You're right.
I mean, we've seen that happening in Victoria. There's just mine after mine that's going up. And I was talking to one of our clients actually who is mining physically for gold as well.
I wanted to do that.
Maybe
buy the machine.
But not everybody wants to invest in the heavy machinery or to be, digging holes in the ground. It's probably much easier to do the course and learn how to trade the stocks. Look, we've got the next one, which is going to drive me nuts looking at BHP, Phil.
I'm going to have to, sorry. Yeah, and this is what I'm talking about. I mean, if we go to the chart of BHP, obviously earnings happened in August, and the one market that held up the strongest during earnings, surprisingly, everybody thought it was the retailers. It was actually the materials sector. And when we look at BHP, it's gone on with it. And why I like this sector is when you look at most of the other sectors on our index, bar energy, bar healthcare, they're already running strong. So in terms of value opportunity, for the lack of a better word, this still provides quite a bit, this whole sector, and you can throw Rio and Fortescue in there as well. But when you look at it, I mean, BHP, this level has been so important, $37. It's tested it. We have seen, what I like about this more recent move is that we've been able to test in July 25 and break through. And we've also broken through what has been holding this stock up for quite a while, which is this momentum line. So, I mean, I don't want to call things, but I think it's getting very exciting for BHP right now.
But we've discussed this stock like a few weeks ago, actually, on the show as well, and we were saying that, it's come back and, to the lows, and we would like to see actually the next leg up, which it started doing, and then we did say it would be good to actually get a bit of a pullback before the next leg up, and I think this is exactly what it's done now. So I think it's creating a fantastic opportunity as well.
Go BHP, that's all I can say. Material stocks, that's what we're waiting for. That will drive the next boom. We've seen it before, financials and materials, that's what leads our market higher typically. Now the next one is interesting. Would you like to talk about DVP?
DVP, Developed Global Limited. I've actually never heard of this stock, to be honest, so I'm happy to discuss it. I think it's actually looking quite solid, and this is very much in line with the stock that we mentioned previously that was in 20 cents or so. So I think good level here is $4 for this stock. It's come back tested and now it's above it. As long as it can actually stay above the previous high, major high, which was in December 2021, it looks like there is the next leg up. It's consolidated for quite a long period of time. So since around 2021 up until 2025. So it's done actually sort of 4 years of consolidation and sideways range. And it's looking quite good as well. I think I've mentioned on a few occasions in the past, I like to see stocks like down at the bottom, or what we like to call accumulation at the market bottom. And I think this stock has actually done that. And now it's actually starting for the next leg up. On weekly chart, it's looking quite good actually. It's been heading upwards for the past 4 or 5 weeks, and it's supported well by the volume once again. So if we can break above the $5 level, or the major high, most recent high in July 2025, we could see this stock continue heading higher.
Now, we've got the Traders Forum. I run a forum each month for advanced traders who do our advanced course, and even past people who have gone through the course. This is going to be one of those stocks for that discussion. I think it looks awesome.
I put it there on purpose because I know when you look at it from just a purely technical point of view, if I took away the code, I thought I'd get that reaction from you. It looks interesting,
doesn't it?
I mean, I know we don't, like, now that you touched on the advanced stuff, and there's a earlier wave component in there, like, that we don't discuss here, and you get to learn that within the advanced course, but I can see something really cool unfolding here.
Yeah, I agree.
Yeah.
All right, now we've got loads more coming up. FMG, that's the next one we've got on our list. Everybody likes FMG. It's BHP and FMG and Rio. It's a big show tonight, isn't it?
Yes. Yeah, we have to. We've got to talk about these stocks because they are looking like they're going to do something in Q4. And, what's different about how they've been performing? I mean, generally after a run-up of this nature, and I'll print it out. I mean, we've gone up since that low about 40-50%. Over the last couple of years, a move like that is often met with sellers pretty quickly. We haven't seen the sustainability of it, whereas...
Because it is a trading stock, that's why.
And it's been unloved for quite a while, and I think obviously there are underlying themes of why it's been unloved, but now the commodity cycle is really turning, and what should have gone down over the last couple of months hasn't. That was the big thing for me, which was like, all right, here's a clue. But if we go to the chart of FMG, what we're seeing, which is different, light pullback on this recent run. Now, instead of pulling back, we're going sideways here. So that's, painting some promising stuff. And we're finally, after all these years, getting through these levels that have been holding it up. So that's the beautiful thing about what we do here and what we teach. It's identifying these moments through confirmation, and you don't have to be a genius or a rocket scientist to work it out, but the price action is going to tell you when these moments come, more often than when the news is going to tell you. So,
one of the big challenges I've found is that people don't know how many stocks to have in their portfolio, or they don't know which stocks from which sectors to have in their portfolio. How many stocks from the materials sector, just as a ballpark, would you suggest that people position themselves into?
I think how many they position themselves into. Look, I'm not a huge proponent of diversification. I think you go where the growth is, but if you do it correctly and have good risk and good capital. So
say Rio, BHP and FMG are all going at the same time. Are you going to pick all of them, or are you just going to pick one or two?
But there's no harm in picking all of them.
Why wouldn't you? Why wouldn't you? Because what's your goal as a trader or investor? To capture growth.
Yep.
Now, if the growth is coming out of two sectors, what's the point of sitting in the ones that aren't?
Yeah.
Why would you sit in energy and healthcare now for the sake of diversification?
Yep, you're right.
I mean, I agree with Phil. You don't have to go 100%, but you go heavy weighting on the sectors that are actually performing well.
Just to help everybody listening a bit more, if they've got a portfolio and they're wanting to not diversify, but they're wanting to actually look at how to break it up, how many smaller stocks from some of these growth sectors should they put in versus the big stocks?
I think also what you're saying is important because it is relative to your strategy. If you're, looking for a retirement type portfolio, it's probably not wise to go heavy unless you are technically adept and you know what you want in terms of the growth. But I get your point. I take it. There are...
The advanced course, we've got a section that helps people make those decisions. That's why it's... And There wouldn't be, there'd be a person every week that I speak to that has a challenge with knowing which stocks to pick and how many should I have.
And it comes down to your process of things. I know I've been speaking to students lately as well, and it's like, oh, what's the golden number? How many stocks should I have in my portfolio? Well, to me, it comes down to your process. If you know what you're looking for, why not have a big universe of opportunities versus a small one? It's knowing what you want and what you're looking for, and quickly identifying, like running through however many stocks and saying, yep, it's fit my criteria, it's ready to go, versus questioning, all right, maybe I'll have one in small caps, maybe I'll have one here.
Well, I mean, we don't teach it that way in the course. It's more like looking at it from a principal point of view and then breaking it down. But I think people need a path, and that's the whole point.
That's right.
Why they're asking those questions. And so when they get to that point in the course, you know, they've got all the knowledge about when to trade, when to buy and sell, what rules to use, and then it's how to construct things in a proper way. So
what's
it's not just
risk tolerance as well? You know, at what age are you in your life, and how comfortable are you with income versus growth? Because if you're going for BHP, FMG, and some of these good stocks that are paying good yields, you might actually, you know, whilst they're in the same portfolio and same part of the same, you know, like material sector and stuff, you still might put 3 of them as part of your income and then look for the smaller ones to actually provide you with additional growth.
Yeah. I mean, I spoke to a guy who said that he uses the fundamentals first to do his filtering, but then he had no idea about the technicals. So he didn't know when. He just found stocks that he thought were good. And then, you know, brokers would be telling him to buy, and he could see that they were falling. So it just didn't make sense. Whereas what we do is package it all up together so you can use the fundamentals, but then focus on direction. And how powerful is that?
Well, think of the opportunity cost of sitting in a stock going down or sideways. Just knowing the what means nothing if you don't know the when.
All right, then let's get into the next one. We've got HSN, which is an interesting stock. Would you like to talk about that one, Phil?
Yeah, sure. Hansen Technologies, I mean, another one that is now finally breaking out. That's why it's exciting. You know, it's been consolidating for a long period, September 21 to literally, you know, recently August 25. We saw a very similar pattern again if you take away this stock code and just look purely on these patterns that continuously form on stocks and markets. And they have since I've looked at the Dow charts, you know, since 1900, and I've seen these patterns unfold. It's crazy. But anyway, you look at it and you think, all right, big growth stock. The company's been able to find appreciation or capital appreciation throughout things. It's tested on this momentum line. We're getting that next leg up now. So, I mean, we're not late. I mean, we're not looking at this stock in this period, July 2021, after a good 100, 200% run. It's just breaking out. So I think it's quite nice. And when I go to the weekly chart, some interesting price action has happened. It got very volatile around earnings season and gapped up on the open, had a big run up. Sellers thought they could have their chance, and this was the giveaway that price was likely to continue. Came back, filled the gap, and look how strong buyers picked it up from there. They said, no way, where the buying started. So right now it's a buyer's market, taking out the previous high. Yes, we're experiencing a bit of a pullback, but you know, we're closing above. We've closed above this huge level here, which has held the stock up for so long, and we closed above it back in 26th of September. So I think, you know, monitor this on the momentum and whatnot, but it's broken out for now. So yeah, it looks
volatile, but it has really good runs.
It does, and just to go back on the stock again, what I'm seeing is actually a very repetitive pattern. If you have a look at this period here from 2016 till 2000, and when is this, 21, and then the same period here as well. So stock has been consolidating in a sideways range for a long period of time and somewhat coming down. And then once it broke out of it, it's actually doing quite the similar thing as well. So bit of homework for those guys to actually probably project, you know, in terms of the price range or extension, how much it's gone up within that range, and then try to project the next range as well and see whether actually the price is going to, or the stock is going to hit that level.
Yeah, that's a really good point, because some people might have thought that stock wasn't going to go to a new all-time high. It did, and it shot up significantly. And what you're saying is watch out for a potential repeat of the same thing.
Correct.
Yep, beautiful. Well, look, that's all of our stocks today, but you guys, you have to vote again. Which one did you like out of this 5?
Ooh,
I'll go with this one.
I'm going to go the miners. I'd I'd be Judas if I didn't pumping them up so much and then going against them.
Well, I've chosen DVP, but I love BHP as well, so I was torn between the two. But if you want a big stock, that's BHP wins every time. Moving on shortly, we have one of Australia's biggest miners back in the news, and this time it could mean that the opportunity for buying has arrived. You don't want to miss this one. It's not one of the stocks we've already covered, but first, let's answer your questions. Vinay writes, I bought BOE at an average buy price of $4.20, and the day it hit my stop loss, the stop loss did not get triggered. When I checked with the trading platform, they said since there were no buyers at the price as the stock fell steeply, so it kind of skipped it. Now I'm sitting at a loss. I can hold it for the medium term, but want to know if it's worth holding it. Oh, look, how many times have you heard this happen?
Yeah.
We've had people write into us about situations like this. It's a big learning curve, isn't it?
It's important. I mean, there's one thing not watching the market, and I understand that, but there's also value in just checking that open to see, is there an announcement today on my stock that I'm holding? Because if there is, and it is looking like it's going to gap on the open on the way down, there is a chance that you're going to get your stop missed if it, in this occasion. So, I would always be a proponent of, if you're holding stocks, just check the morning news and see if there's an announcement out there about your stock.
And to help Vinay a bit more, I mean, in this situation, he's continued to hold it. So, what he needs some rules and some discipline around the exit process here.
Yeah, I mean, look, Boss Energy was one of the ones that gapped down really hard. It was unfortunate. I think gapped down 40% in a day. And it was, rough. 50% it gapped down in the day. Started 34, got down to 50% in there. So I can understand where some of that, you freeze a little and you think, what do
Especially if you don't have the knowledge and experience to analyse the stock and say, okay, this is what my plan is now.
Yeah.
I've got another plan. Or would you just say, look, get out of it?
I think it's wise to at least have a look and say, okay, let me adjust on the fly now and just see whether or not there's an opportunity for this to bounce from here. Yep. Just ask the question, do the analysis, and if the answer is yes, then maybe you give it a little bit more. If the answer is no, then you obviously got to make a decision. But where it bounced to was, Zoran marked that level there in the horizontal line. It's a very important level, and right now it's holding it. So, there is, I guess, one train of thought to say, okay, well, maybe you make this the line in the sand now.
But sometimes, the stocks do get oversold emotionally quite heavily, and it feels that this is one of the stocks. Well, I didn't go into it to see what the fundamentals are, but
it was on the uranium. It was a uranium thing, and
it was a uranium.
Yeah.
Okay, I haven't quite seen it, but what I can say is that it has actually somewhat started coming back up, and it would be good if it, broke through this recent high at $2.30 and then started closing the gap. That could be a good opportunity. But again, if it does break below that most recent low, which is around $1.70, then it's likely that we'll get probably further downside. And as I marked on monthly chart, this stock actually did provide quite a bit of resistance and support in the past, and this looks to be quite a strong level. So I would actually base my decision around that. Yeah,
the worst thing you can do is fall in love with the hope that just because it's starting to creep up, that's it, the low's in. You still got to have a level to say, I might be, if I'm wrong here, or if it continues to go, you've got to get out.
Because who's going to say this is going to go below $1? I mean,
exactly, that's
easily.
Right. Good advice. Now, Chris's email is next. Keen to hear your thoughts on CWY. It has broken through a medium-term downtrend and looks to be continuing the long-term uptrend. The trade would be for an SMSF, so long-term. What do you think, Zoran?
I think this is good. That was Chris, wasn't it?
Yep.
Yeah, I think it's a really good stock. I think he's done quite well. Once again, stock that's been actually trending for quite a long period of time, and then it's been going in a sideways range. I really do like it. I think it's actually starting to create a bit of upside at the moment. So my first level would be around $3 mark. And the next level would be the most recent high, around $3.31. On weekly chart, I can see the volume is actually backing that as well, which is sensational. That's really good as well. The stock has been going in a sideways range for quite a long period of time. And what I generally find is that the stocks that go in a sideways range for a long period of time, the moment they actually start getting some momentum and heading higher, the breakout can be quite significant and aggressive. So that's what I like as well. So $3 is actually my key level. In terms of the support, I'd be looking at probably 271 as a stop loss. Or if you a little bit more, it depends on your level of risk, but the next major level would be the low of 255. But overall, I think it's a great stock. I think it's got a lot more potential, and as long as the fundamentals can back it, then there's nothing stopping this from going towards that $5 mark.
It looks interesting. And I mean, sometimes when you look at these stocks, the patterns can tell you one thing about the longer term direction, but it's really important to learn and understand how to recognise that direction with different strategies applied. Now, Zoran, you've given us a really good idea about that one. Next, Adam's email, and he writes, I'm looking at MSB as it seems to have climbed above some solid support at $2. Volume has been increasing also. Is there a short to medium term play in this stock to $3.50? If it breaks $3.50 with strong volume, could it run to $5.50 pretty quickly? There's an opportunity there.
Yeah.
What do you think, Phil?
All right, let's go and take a look. I mean, look, when you look at the monthly volatility that this stock does or has done since December 24, to think that it can go to 350, which is somewhere through there, I mean, it's not out of the ordinary, right? You've got that month did that typical type of volume, that month did it. So whether it's a month or two, you're looking at, right now we're in a bullish phase for the stock. We've had the pullback. Can it get to 350? Absolutely. I mean, we're in bull market right now. I really like the way it's setting up on this weekly chart. Strong base, big buyers, and that's a takeaway. Look how strong the buying was coming in through here. Sellers tried coming into the base of the buyers. No way, come through, closed above the high. Yes, we're pulling back a little, but that's a healthy trend. And so right now, to get to 350, that's the next target or that high. I think, sorry, you said 330.
350 was it?
Or 350, 330. I think 330 is definitely the one to watch for next, which is kind of,
target. Look, 550 target.
Yeah, 550 target. Look, the 550 target, again, more medium term, I think, yes, there's an opportunity. And the reason I say that is because right now we're starting to see numerous bases. Back throughout this period, look what we saw. Base, big spike down, spike up, and look how sharp the spike down was. This is getting more sustainable, and it's getting more sustainable to the point where we can actually follow it on the way up. So I think there's a possibility that we get there. I'm just mindful that before we do, there's this huge level through here. And you can even push this level down a little if I can get my mouse cursor to work. But yeah, something through there, I think that's the next level that we've got to be mindful of, 330 to 350. So I'll agree with you on 330 to 350 short term. Let's get through there and then we can talk about 556.
What's also interesting about this one is that I remember people talking about this. A lot of brokers were recommending it when it reached those dizzying heights, and then it fell from grace. It was, people mortgaged themselves to the hilt on this stock.
Yeah.
And it just drove it so high. And then, look at where they've come back to. It was a $10 stock, and look at where it went. I mean, down to $1, less than $1. So it can happen, and that's why you can't be complacent and buy and hold something and follow it based on news. You've got to have proper rules, particularly important for these sorts of stocks. So make sure you get that knowledge.
Yeah, and big stocks aren't immune from it either. I mean, there's this whole thing about, okay, yeah, you buy and
well, look at Rio Tinto in the GFC. Nobody thought it was going to fall 90%, did they?
Fortescue, same.
Yeah, exactly. Yeah. Crazy stuff. All right, now we now have Iqbal's email. Could you please cover Ordinate Group Limited? Despite the recent downturn in valuation, possibly because of revenue and gross profit contraction, the balance sheet remains strong. It has a near monopoly status in professional networked audio, and most importantly, I think it's showing signs of a recovery in price. So fundamentals are aligning on this one.
Technical
what
is a
do you
no.
think?
Technical is a no.
Yeah, and I mean, just because the balance sheet might look strong, if the company's reporting downgrades in earnings and profit, you don't just wipe that away and say, that's okay, the balance sheet looks strong. If it continues to report downgrades in earnings and profit, that balance sheet is going to get chewed up pretty quickly.
True.
So
if it looks like a dog, smells like a dog, it's a dog.
yeah.
Right? And I would say probably this is the one.
you're not being harsh at all, mate? Jesus.
So, have a look at it. I mean, it's gone from $21 in April 2004. Within 18 months, it's actually lost 70% of its value. And now it's actually at $4.70. There is a reason for that.
Yeah.
The stock has been actually downtrending like for a long period of time. It's, in terms of the percentage terms, we're talking about 81% down. Like, I mean, yes, at some point it's going to turn around and it's probably going to find a good base. But look, on weekly chart, it could be that, because sometimes the extended move can go below the prior low to actually kind of pin the bottom. But at the same time, I'm not convinced that is the case right now. And for me, this is a big no.
So a picture tells 1,000 words?
For me,
Stick
on
to the
this one,
charts.
absolutely.
Yep.
You know what's a little more concerning for me also is the fact that he's mentioning that there's the recoveries, the price seems to be recovering.
Yeah.
But I'm not so sure about that. A few weeks up doesn't make a recovery. And this is the point, again, going back to the things, that one of the best things that we teach out there is identifying with confirmation real recoveries. And when you look at that, you go back to that chart, 1 week is not a recovery. In fact, it's just a counter move to the current downtrend right now. So I take Zoran's point. I mean, there are ways to do this properly to identify recoveries. I'm not going to get into them.
Don't get caught up in news and hype about it.
1 or 2 weeks is not that.
You know what? I'll probably see more downside on this stock.
Yeah.
Just having a look at the monthly chart at the moment, if it doesn't hold around these levels and goes below that, then we are probably likely to see the next $2.50 mark.
Thank you very much for that advice. Caution there on that particular stock, Iqbal. You might find something better when we're just about to get into the hot stock tip. Now it's time for Zoran to deliver that hot stock tip and knock Phil off the podium. Let's see it. You got the boxing gloves out?
Thank you. The hot stock tip this week is Rio Tinto. Before we get to the chart, Rio was in the headlines today, and for good reasons, as they announced they will spend, in conjunction with partners, $733 million on developing new iron ore mines in the Pilbara region of Western Australia. So
look out, world, here comes Rio. Is that what you're saying?
I mean, very similar story to BHP. I think iron ore has actually somewhat recovered. I think it's looking really good as well at the moment. It's broken through some major highs recently. I think, the stock has broken through a momentum line as well. It's actually got quite a heavy volume supporting it. I think there's a lot of institutions out there actually buying as well. I've spoken to a few fund managers whilst doing media externally and stuff and talking to other brokers. I think, it's becoming a bigger part of the portfolio for investors as well. So I think there's a lot of good upside on this stock. Rio has always been, a big portion of the ASX 200, the top 20. And I think now is actually time to actually start looking, especially with the banks being overvalued and earnings being, so high and rebalancing and
Phil,
restructuring the portfolio.
You're just about jumping out of your seat to say something.
I'm about to pass out if you don't get
Stop holding your breath, okay?
Can I also add, the thing with Rio is the lithium story. They went big in lithium a few months back in March, and right now you look at the lithium price, lithium is ticking up, it's seeing buyers. So there might be a really nice, combination here of getting that lithium tailwind coming through on Rio as well. Something to keep in mind.
Good information. Yep. Well, that was Rio Tinto, and we all like Rio. If you want more from us, check out our video, 8 hidden ASX resource stocks to buy before they take off.